Hello and welcome to NYSE Investment. This analysis is for Vertiv Holdings on the New York Stock Exchange as of 31st of July 2026 with a share price of $244. The full report is on NYSE.ca. Vertiv is the picks and shovels of the AI data center build-out, power and liquid cooling, with the strongest structural driver in the batch at 86. But even after an approximately 28% drop, the stock trades near 37 times forward earnings against a 24 times warranted anchor, so the valuation-ceiling gate caps it at hold. A hold by valuation discipline, not a buy. Vertiv makes the power and cooling gear that keeps data centers running, uninterruptible power, switchgear, and the high-density liquid cooling that AI server racks now demand. It is the picks and shovel supplier to the compute boom. It doesn't make the chips, it makes almost everything around them. Business quality is a strong 80, and the driver an elite 86, the highest structural tailwind we track. The second quarter made that concrete, revenue up 24%, adjusted earnings up 60%, a backlog near $15 billion with book-to-bill above 1, and full-year guidance raised across the board. But the whole story sits in the price. Even after a 28% post-earnings drop, Vertiv trades near 37 times forward earnings against a disciplined warranted anchor of 24, a ratio of 1.5, firmly in the expensive band and above the 23 times industrial's floor. That fires the valuation-ceiling gate, which caps the signal at hold on every horizon, regardless of how good the business is. The disciplined anchor implies an intrinsic value nearer $200. At $245, you are paying a premium for growth that the quarter just proved can be lumpy. Timing is a mixed picture. Vertiv fell from a $376 May high to a $223 low on the revenue miss, a classic AI cohort derating, and is now bouncing up about 7%, back to its 200-day average near 246. But the daily trend is still down, well below a 50-day average near 307, and no entry group is met, so the read is, wait. The medium and long calls are hold too. The honest move is to accumulate on weakness, not chase the bounce here. Now, the other side of the ledger. Expensive approximately 37 times, bare $190 is 22% on a re-rating. AI CapEx digestion. The purest cohort name falls first. Schneider, Eaton, and nVent all push into the build-out. Rate shock lifts the discount rate on a long-duration name. Now weigh the risk against the reward. The bull case is roughly 84% above today. The base case, the most likely, about 39%, and the bear case a fall of about 22%, so you are risking about 22 to make 84. So, our call on Vertiv Holdings on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by NYSE Investment at NYSE.ca. The link to the full report is in the notes below. Have a great day.